Welcome back to another episode of 5 Minute DD. Today we're talking about ticker JEPQ, a much less popular JP Morgan Equity Premium Income ETF. It is less popular because it has not been around nearly as long as tickers like JEPI and hasn't quite grown to the popularity yet, but I think that will come with time. Guys, welcome to the channel. This is aka Spencer Dunbar. We're trying to hit that 100 sub mark. You guys could subscribe if you're interested in stock content. I put out about 4 videos a week and then a number of shorts as well. And I've been growing this channel for a couple months now, and you guys have been so gracious with liking and commenting on stocks you wanted to see, getting my opinion on things, and I've learned so much from my subscribers as well, and I appreciate that. So we're going to go ahead and do a 5-minute DD video on this income ETF. For those that are new to the channel, this is where I do some research and I get all the important information that I would want to know before purchasing a stock or an ETF, and I throw it in here and try and give you guys a good, even breakdown, an unbiased breakdown of these stocks, and I try and keep it to around 5 minutes. That rarely happens, but I'll definitely keep it under 10, hopefully. So let's go ahead and jump right into the pros of JEPQ. You have a nice near 9% dividend yield, a very phenomenal dividend yield. Now, JEPQ is a newer fund. It started in May and didn't pay dividends until June. So you don't have an insane dividend history, so that could be a very skewed yield. It just depends on how they continue to perform for the coming months, really, to get more of a dividend history. But it's still very impressive. While we're talking about dividend history, let's pull up their dividend history. So this has them as a 14.14% yield. That is definitely higher, and it's probably more accurate than Google's, which was the 9%, because of their high dividends that they've been paying out. So they did pay out 2 dividends in December. I'm not sure why that is. It was a bonus dividend by the looks of it, and an impressive one at that. That's what bumped their yield up, and how this yield is probably more accurate. But again, it's all relatively skewed because it is a newer fund. Here's their first dividend paid out in June, paying out 37 cents. Definitely impressive. They bumped all the way, jumped around quite a bit, 40 cents, 54 cents, at a high of 68 cents, and that low of that second dividend of almost 34 cents. Still a very admirable yield, and that is why I think JEPQ could have a very intense history, or a future, I should say, with their dividend, because a lot of people love JEPI because that aggressive dividend yield, and their covered call strategy on the NASDAQ is not foolproof, but it's similar to QYLD, the same kind of thing. For those that don't know what QYLD is, that's another ETF that trades on the NASDAQ, and it has a very high yield as well. Go check that one out. I have a full 5-minute DD video on that if you are interested. Another pro is just the name brand for JP Morgan. When we're looking at JP Morgan and with tickers like JEPI, JEPQ, people trust it because of this name brand, and they're not wrong in doing that. I wouldn't overly trust just a brand myself. I don't advise on that, but I do think that JP Morgan's history in the financial industry and the sector as a whole is important to note. They are not some new young gun. They are tried and true and have been in this industry for a long time. And older investors would definitely be more apt to purchase the funds of JP Morgan than a lot of newer types of funds, in my opinion. Honestly, I have no stats on that, so it could be completely wrong. That's just from the people that I've talked to in the investing world. They stick to what they know. And next, we'll talk about the covered call ETF on the NASDAQ, which is important. For those that don't know what a covered call ETF is, it means that they are selling covered calls every month, and that's where the dividend income is coming from. It's very important to note that it's on the NASDAQ because I think the NASDAQ has a really good growth history behind it and an insane growth future. So the covered calls do play an effect on that. You want it to be a profitable covered call strategy, and so far they have done just that. And with the NASDAQ even falling, we see the price of JEPQ falling quite roughly since they first went public. So starting at $51, now it's sitting at $43, but they did bounce from the 40 mark and have since been doing relatively well. I do think we're not out of the rough waters yet. We could continue to see a bounce for a while. But the beauty of these covered call ETFs, for those that don't know why people invest in these so often, is that when a stock trades sideways, you can still have an insane return based on the high yield, whereas the price appreciation doesn't matter nearly as much. I'm not buying JEPQ for the price appreciation. It is definitely a bonus if you can get some of that, but it's not the motive behind these funds. You are trading it because you want that 9%, that 14% dividend yield to continue to pay you money, whether the stock goes up or down or just trades sideways. That's why I really like these kind of funds. They are definitely a hedge to the overall growth of the market, but that is a negative and a positive. Now, it does pay monthly dividends, which I love, and we talked about their dividend history. Relatively impressive, but not very much there. They have a lot of ground they need to cover before they could be considered a safe play, in my opinion. But the thing is JEPQ is similar to JEPI, and they definitely, JEPI started out similarly and then grew their dividend quite nicely. So I would be surprised if JEPQ didn't do the same thing. But again, you cannot tell without the dividend history. That's an important thing to note. Now let's talk about their management team. So this is all pulled from their investor relations portion of their website. We can see their top 3 portfolio managers, 36 years in the industry, 10 years in the industry, 15 years in the industry. Love that. Good amount of experience. 14 years with JP Morgan, 10 years with JP Morgan, 15 years with JP Morgan. That's also important. So they've been working with the JP Morgan group for a long time. That, in my opinion, is great because it shows that they're working probably very cohesively as a team. And then on top of that, they're all managed this fund for less than a year because the fund hasn't been around for a year. So definitely important to note that you can't expect them to be working on the fund longer than the fund's been around. So next let's talk about the top holdings. So I'm going to talk about the top 5 main ones. They have a number of here that they're very complicated. I'm just going to give you the name brand ones. So we have Microsoft coming in as number 1, 10% of the net assets. I love that. Love Microsoft as a stock. Apple, another great one. Google, insane. Amazon's actually my favorite at the prices that it's been at recently. They have a little bit, it's almost double Microsoft compared to Amazon, but Microsoft has been doing a little better than Amazon recently. So I do see why that is. And then Nvidia, way down at the bottom there, their 9th percent or 9th stock in percentage. Not terrible. Nvidia has been beaten down like crazy, so I see why it's a smaller percent, but definitely one that I do like for a bounce back play and a long-term play once we get out of these rocky markets that we have been in. Now let's talk about the cons of JEPQ. Don't think it's all pros. There are definitely some cons. The new fund, the risk of this as a new fund is pretty intense, and I don't want anyone to jump in over their head without researching this on their own, guys. I'm not a financial advisor. This is not financial advice. You need to do your own research and try and understand these concepts before you buy into this ETF. It's very important, and there is a lot of risk. JEPI turned out okay, but there could be a number of factors that hinder JEPQ more, and you don't want to end up losing money in the long run. I don't want anyone to do that, so double check that. Double check everything before you buy. The dividend history, new fund, not a great history, although they have a high yield right now. It could change, and that special dividend in December was great, but still risky. It is risky. It's high risk, high reward. So JEPI is definitely, I wouldn't even say a safer play. I guess it's a little bit safer because it has a stronger history, but you definitely need to check all of this stuff out. And market price appreciation. So the reason I talk about price appreciation, like I said, you're not going to get most of your return from the price appreciation. You're getting it from the dividends. So this is not one that you need to log in every day and check and say, oh, what did JEPQ do today? Is it up 10%? Because it's likely not going to be. It's likely going to have percentage changes every couple of days. It shouldn't be too drastic. It could be in a downtrend like we've seen, but you're still getting that dividend income that's supposed to be better in the long run. So that is all I have to say. We're going to cut the video before I go way too far over. As always, if you guys could like the video, that helps me a ton. Drop a comment on the next stock you want to see in a 5-minute DD video. Subscribe if you are interested in this type of content. I'm super, super grateful for all the subs I've gotten already in this month. My goal is to hit 1,000 subs by the end of this year, 2023, and we are well on our way. So I appreciate you guys for that, and I hope we continue to grow our portfolios, grow our wallets, and grow our knowledge together. So thank you guys for watching the video, and have a good day.